ITR form selection to bank validation. 5 mistakes that a taxpayer should avoid. ITR filing. The due date for income tax return, ITR, filing for the financial year, FY, 2021-22 and assessment year, A, 2022-23 is 31st of July 2022. So, an earning individual would be busy assessing their financials and documents related to them. However, while filing their income tax return, it has been found that an earning individual commits some common mistake that leads to rejection of their ITR, income tax notice or delay in ITR refund. Speaking on the complexities that a taxpayer needs to understand, Sujit Bangar, founder at TaxBuddy.com said, income tax return filing has elusive complexity. We may be thinking that ITR is filed correctly till we get any notice for defective filing of income tax return. Most of these mistakes are due to wrong interpretation of tax provisions or due to ignorance. Here we list out 5 common mistakes that a taxpayer commits during ITR filing. 1. Not taking credit for tax deduction. Many times we get less refund than expected. Sometimes we get demand notices instead of refund due. And common reason for this is not getting due credit for TDS deducted. 2. Speculative income versus regular business income. Major mistakes users do is in respect of set-off of loss from speculative transactions like day trading transactions. Sometimes we have loss from speculative income and profit from regular share trading or F&O trading. 3. Bank validation. Third most common reason for delay in ITR refunds is issues in bank account validation. One should ensure PAN and Aadhaar are linked. It helps in bank validation for faster refunds and in e-verification for quick processing. 4. Incorrect ITR form selection. Fourth common mistake is in selecting ITR form. If one has more than one house property, one cannot file ITR 1, for example. Therefore, correct ITR form needs to be ascertained and filed. 5. Tax can't be saved beyond Form 16. Salaried individuals have major misconception in mind that tax can't be saved beyond Form 16. They file ITR by relying on tax computation of Form 16 without giving fresh look at tax deductions.